So let's talk about what types of ETFs are available in the US ETF marketplace. There are over 2,200 ETFs with $3.5 trillion of assets under management. It can be overwhelming to investors to understand what types of vehicles and exposures are available to you. So let's talk a little bit about what types of ETFs are out there and some of the most popular ones. So sector ETFs. Sector ETFs are ETFs that invest in stocks and securities of a specific sector. Sectors such as financials, consumer staples, consumer discretionary, real estate, the general sectors that you hear about when they're talking about the S&P 500 exposure, but this gives you a targeted exposure into that specific sector, so you can take a sector bet. The global standard for sectors in the US is known as GICS, which was created by Morgan Stanley Capital International and Standard & Poor's. So that is generally the type of sector classification that you are going to see when talking about sector ETFs. Let's talk about thematic ETFs. Thematic ETFs are ETFs that provide exposure to related themes or trends, what is generally hot in the market right now or what a lot of people are talking about. So such as technology trends such as robotics, biotech, cloud computing, AI, or ESG, which is environmental, social, and corporate governance, which is also talked about by a lot of investors and is also a hot topic in the US ETF marketplace. Factor ETFs. WisdomTree was one of the pioneers of factor ETFs, and what they do is they provide exposure to certain fundamental attributes such as dividends or earnings, also other factors that are related to higher returns, which target those specific factors such as value, momentum, volatility, or size. A lot of factor ETFs fall into the bucket as known as smart beta or modern alpha, as we like to call it at WisdomTree. The marketing term is ever changing, but really what you're getting is a fundamental exposure to an asset class, typically different from what is known as beta, which is typically market cap weighted ETFs or funds. Leveraged ETFs. Leveraged ETFs do exactly what they sound like they do. They use derivatives or take on debt to magnify exposure, both long and short, for a specific investment exposure that the ETF is designed to track. The important thing to understand about leveraged ETFs is they are designed to be daily trading vehicles. They are reset at the end of the day and provide leveraged exposure for one single day. So these are not meant to be held for long-term exposure. They are generally trading vehicles that are designed to be used on a single trading day. So where do ETFs trade? ETFs are all listed on a stock exchange, but you must trade them through a platform that is connected to a stock exchange or another alternative trading platform, such as Interactive Brokers or any of your other discount brokerages or any of the platforms that you may be able to access stock trading on. So you need to be able to access a broker-dealer platform to be able to access ETFs that are listed on an exchange.